Hi, we're Matt and Noah, and we're going to be talking about how to measure economic performance.
Our first order of business in measuring economic performance is understanding the circular flow of economics. And we're going to start with households. Households are just the average citizen, someone who makes money, buys goods, and walks the family dog. As you can see here, households on the far left pay taxes to the government, feed money into the product market, get money out of the resource market in the form of wages, and provide labor and capital towards the resource market.
Going clockwise around the flowchart, the next piece is the product market. The product market is where goods and services produced by businesses are sold to households. The households use the income they receive from the sale of resources to purchase the products. The money they spend is returned to the businesses in revenue. Product market regulation is an economic term that describes restrictions in the market.
The next thing around the circle is firms. A firm is a business organization, such as a corporation, limited liability company, or partnership. Firms are typically associated with business organizations that practice law, but the term can be used for a wide variety of business operational units. Firms take in revenues from the product market and provide output to the product market. They also take in factors of production from the resource market, such as mining, and provide money to the resource market.
The next piece of the circular flowchart is the resource market. The resource market supplies businesses the resources they need in order to produce goods and services. Common resources include labor, capital, land, natural resources, and entrepreneurship. The resource market gives factors of production to firms while getting money from them. It also gets land, labor, and capital from households while giving the households wages.
The final piece of the circular flowchart is the government sector. The general government sector includes all institutional units whose output is intended for individual and collective consumption and mainly financed by compulsory payments made by units belonging to or other sectors, and are all institutional units principally engaged in the redistribution of national income and wealth, or taxes and government spending. The government sector takes in taxes from households and firms and gives out public goods to both firms and households. Now that we understand how the economy all fits together, we can now look at macroeconomic measurements, such as GDP, which combines all the factors shown in the circular flow and how they all accumulate to become one gross domestic product.
GDP is defined as equaling C for consumption, I for investment, G for government expenditure, or government spending, X for exports, and M for imports.
Consumption is defined as the money that people spend buying goods and services.
Investment is the gross private investment. It is usually generally broken down into fixed investment and changes in business inventories.
G stands for government spending on items that are consumed in the current period, such as office supplies and gasoline, and also capital goods such as highways, missiles, and dams. Note that the transfer of payments are not included in GDP, as they are not part of the current production.
Net exports is calculated by subtracting a nation's imports, M, from exports, X. Imports are goods and services produced outside the country and consumed within, and exports are goods and services produced domestically and sold to foreigners. Note that this number may be negative, which has occurred in the U.S. for the last several years. Net exports for the U.S. were minus $606 billion during calendar year 2004. Analysis U.S. Department of Commerce, June 29.
Another macroeconomic measurement is unemployment, and it comes in three different types.
One type of unemployment is structural unemployment. This focuses on the structural problems within an economy and inefficiencies in labor markets.
Frictional unemployment is the time period between jobs when a worker is searching for or transitioning from one job to another.
The last type of unemployment is cyclical unemployment. This is a type of unemployment that occurs when there is not enough aggregate demand in the economy to provide jobs for everyone who wants to work.